Time for the ETF report. We've been telling you this week about the record inflows to that investment category in 2025. Let's find out what trends may drive the market in 2026. We're joined by Rhind, founder and CEO of Graniteshares. Will, thanks very much for joining us. Just remind us, what is Graniteshares? Where do you operate? And what is your main business?
Absolutely. Well, thank you for having me, Andrew. Graniteshares is an ETF issuer, which means that we create ETFs ourselves, we issue them, and investors can trade in these underlying ETFs. And we have all sorts of different strategies, but we operate worldwide out of the US, headquartered in New York.
You note, and we have heard about this in Canada and also, I believe, in the US, a surge in interest in actively managed ETFs, not just the traditional passive model.
That's right. Yes. So actively managed ETFs are growing really quickly, record inflows last year. And it's perhaps a little bit of a twist on what people might perceive as being actively managed. In other words, it's not necessarily the star fund manager picking stocks anymore. Active ETFs is much more nomenclature for flexibility. And this is a wrapper or a type of ETF that allows the manager more flexibility, typically to implement derivative-based strategies. So you see active really proliferating in areas such as leverage, such as high yield, and other cases where more derivative type strategies are being implemented.
You have some products. I know you'll be delighted to discuss them. Why not? You have one called PLTM, the Graniteshares Platinum ETF. Now, this, I believe, just tracks the spot price of platinum. And you launched it, I think, in the summer of 2023. And it's done a pretty good job. As far as I can see, it has kept up with platinum futures with a gain of about 130%.
Yeah, so this is exactly as you say. It just owns physical bars of platinum, or in the case of platinum specifically, we call them plate and ingot. So these are warehoused in a secured facility in London, and it just tracks the spot price of platinum. And I think this is an interesting story because the headlines are dominated by gold and now dominated to a lesser degree by silver. But for everybody that maybe looked at the gold price going to all-time highs and said, oh, goodness, I missed that. What's next? And then saw the silver price going to all-time highs and thought, oh, my goodness, I missed that. Maybe platinum is something that is worth considering. Platinum used to trade at a premium to gold, so much so that it's embedded in our English language, i.e. the word platinum as meaning above gold. And platinum is traded as a discount to gold for quite some time, over a decade now. And so maybe this is the time that platinum catches back up to gold or even eclipses gold in terms of a price per ounce.
You have another product here that plays technology, the Yield Boost Semiconductor ETF. It looks to generate a yield for investors from option strategies. I believe you launched this one late last year, November, and it has underperformed the NASDAQ 100 so far. It's down about 14%.
Yep. So this one is not a tracker on the NASDAQ, but this one seeks to generate very high yields or weekly distributions from option strategies on a basket of semiconductor stocks. So this is for people who don't necessarily want to invest or pick which semiconductor stock is going to do the best, but ones that want to specifically prioritize the generation of income. This yields about 140% per annum on an annualized basis.
That's it. Sorry, just the yield? Just the yield is?
That's right, yeah. So it's one of the highest yielding investments out there. And it achieves that because it engages in option strategies which allow an ETF like this to generate much higher yields than is possible in traditional areas such as dividend-paying stocks or bonds.
I do see that if you count the yield, it's up. It's given people a total return of just over 6% versus about 4% for the NASDAQ 100.
That's right. Yeah, it's a strictly weekly yield payer. So this is prioritizing high income.
But there's got to be a catch here with that massive yield. There's no free lunch.
There's no free lunch, Andrew. You're exactly right. The catch is it's more volatile. So clearly, if you look at something like a treasury bond, the idea is that your principal is secure, but you're getting a very low yield in return. The further you move out on the risk spectrum, the higher yield you earn, the more risk you're taking with principal. So in this case, clearly a basket of semiconductor stocks, those stocks can go down as well as up, and they are more risky than, say, an investment in treasury bonds, and the yield appropriates that.
Right. And then just finally, we're tight for time, but tell us about this DRUP, the NASDAQ Select Disruptors.
Yeah, so this is a traditional index tracking ETF. This is a portfolio of the top 50 disruptive stocks in the US market, and that's as designated or researched by NASDAQ. A slightly different twist on the NASDAQ 100. What's interesting about this one, perhaps, is it's not just a Magnificent Seven play, which you see in so many tech ETFs. This one analyzes individual companies and includes disruptive companies that are not just technology companies, but also in other sectors like healthcare. But crucially, misses out on some of the biggest Mag 7 names, and performance has been very good.
Yeah, so I think that one's been around since at least 2021. And
Yes.
I'm showing a total return over the 5 years of about 84%. So it has lagged the NASDAQ 100, my screen shows, which is at a total return of about 106% over that period.
Yeah, so it's performed well. I mean, NASDAQ, there are not many things in this world that have performed better than the NASDAQ, given the concentration in NVIDIA and some of the other Mag 7 names. But to get close to the NASDAQ is pretty good these days.
Well, we'll leave it there. Thank you very much indeed.